In this presentation, we will take a look at tips from the IRS from the Internal Revenue Service dated August 8th, 2019. These summer activities can affect next year's tax returns. So we're looking at tips related to summer activities that can affect next year's tax return. Summertime activities often affect the tax returns people file the following year. Here are some things taxpayers do during the summer, along with tips they should consider. First one, big one, getting married. Obviously, getting married, first thing you think of is taxes, right? And the marital status with relation to getting married could be a big, significant deal. So newlyweds should report any name change to the Social Security Administration. They should also report an address change to the United States Postal Service, their employers, and the IRS, the Internal Revenue Service. This will help make sure they receive documents and other items they will need to file their tax returns. We want to make sure that everything's proper in terms of the proper mailing address and the proper name. That will avoid confusion with the IRS as we get the documentation that we need to fill out the tax returns from people like our employers, our institutions, the banks, as well as with the IRS, so that when the IRS gets that documentation from one, us, taxpayer, and two, the institutions, they're able to match that up. And that's really where the big concern is. Obviously, we need to get the documentation. That's a big concern. But also, the IRS needs to line that stuff up, and that's where some problems can happen. If the IRS has a different name, different address, or something like that, they may get messed up in terms of how to line up the W-2s and the 1099s they get from the institutions with what we report on the tax return. Also, obviously, getting married is going to have a significant effect in just the tax calculation, so you probably want to run some projections and think about projections related to getting married, especially if you're in a situation where the incomes are basically different level incomes, or if there's going to be some types of credits that are currently eligible for, such as especially an earned income type credit could get skewed in some of the child tax credits. So those are the things that could get distorted with relation to being single or being married. So if you have credits that you're dealing with that you get a benefit from, especially an earned income credit and some of the child tax credits, then you want to consider when you're getting married, probably want to do a tax projection just to see what the difference will be if you're married filing joint. Sending kids to summer day camp. Unlike overnight camps, the cost of summer day camp can count towards the child and dependent care credit. And that's something to consider. Remember, you have the child and dependent care credit. There's a couple credits related to there's a child tax credit and the child and dependent care credit, which usually is basically an institution taking care of the kids. And if you qualify basically for overnight camps, if that may qualify, then you may be able to take the cost of the overnight camps and use them towards a child and dependent care credit. Remember that the child and dependent care credit is better than a deduction. It's going to be dollar for dollar tax back. So if you can get a credit, if you can get credits, you really want, those are worth the money, worth the time to do. If it were just a deduction, you might say, it's not going to, because a deduction, you're only going to get a percentage of the amount of the deduction that you're going to get depending on your tax bracket. But the credit, whatever qualifies for the credit, you get the full thing. Therefore, if you can get the credit, it might be worthwhile to make sure to, keep that documentation and go through the paperwork for it. Working part-time. While summertime and part-time workers may not earn enough to owe federal income tax, they should remember to file the tax return. They'll need to file early next year to get a refund for taxes withheld from their checks this year. So notice that if you have a job in the summer, if that's the only job that we have, like say if you're going to school and you just have basically a summer job and that's the only income you have, you might say, hey, I'm not going to file because I earn less than possibly the standard deduction or less than what we'll be owing taxes on. Even if you're not required by the IRS to file the taxes, you generally want to do so because most of the time the government or the employer is required to do some type of withholding. So that means that they took some money out of your paycheck, obviously, and they sent that to the government. So you have to file even if you don't owe any money so that you can get that money back. Also note that if you have a summer job and you have another job during the year, like if you're a teacher or something like that, and then of course you take a summer job, the summer job may not be a lot of income, but whatever income is there is going to be taxed at whatever your rate is combined together with the other income that you have. So that means that you might end up paying taxes on it, because when you fill out a W-4 for a summer job and you don't expect to work that much, they're not going to withhold enough if you have other income oftentimes. So just make sure when you pick up that summer job, if you're only going to make a few $1,000s and you say, they might not withhold anything on it, but you may end up increasing your tax burden more than you think, given the fact that that's going to be taxed at your total income level. So just be aware of the tax calculations when you have multiple jobs, even if they're small jobs. Small jobs will not calculate oftentimes the withholding properly because they don't have all the information. Now, there are tools to kind of calculate what the withholding should be, a lot more sophisticated, that are free on the IRS website here, and you can take a look at the tax calculations for what you should be putting on a W-4, even for a summer job. And note, for a summer job, if it might seem like it's not worth it if you do a summer job and you have to withhold at your normal income rates, which will be really high considering a part-time summer job. But it's still worthwhile to do, because basically that means it's paying your taxes if that's the case. So a couple things to keep in mind. Normally, employees receive a W-2 wage and tax statement from their employer to account for the summer's work. They'll use this to prepare their tax return. They should receive the W-2 by January 31st next year. So note, when we get the W-2, of course, year ends 12/31, which the employer is basically required to send out the W-2 by the first month following. So that we should get it at the end of January of the following year after the tax year we're thinking about. Employees will get a W-2 even if they no longer work for the summertime employer. So even if it's a part-time employer, you will get a W-2. It's required by the IRS. You'll get a W-2, and of course the IRS will get a copy of that W-2 as well. Summertime workers can avoid higher tax bills and lost benefits if they know their correct status. So we want to make sure we have the correct status. Employers will determine whether the people who work for them are employees or independent contractors. Big difference between employees and independent contractors. If you take a summer job and you're going to be an independent contractor, then that's great, but you're going to get a 1099 most likely, as opposed to a W-2, and they won't withhold probably anything on they won't withhold anything on the 1099. So even if you only earn like a couple $1,000s, it's going to be taxed at whatever rate your tax rate is at. So that can really kind of throw people off sometimes when they get a few $1,000s or get, some money in a contracting job and don't have any taxes withholding on it, and then realize that that's going to increase the amount of taxes they owe at the end of the year because they're going to be taxed on it and there was no withholding on it. If you're a W-2 employee, then you'll have withholdings, not only for federal income taxes, but also for Social Security and Medicare. So it's depending which is the better status to do a 1099 or to do an employee. One, it usually is driven by the circumstance, not by your choice of the two. But there's some situations where there could be a choice because it's a situation where you could possibly qualify as a contractor or an employee. It's kind of up in the air as to what the best circumstances is. There's pros and cons of both of them. If you're a contractor, you can you can write off a lot of the expenses that you have on your own expenses. However, you also have to pay self-employment tax if you file a Schedule C business, which includes Social Security for the employer and the employee. So there's pros and cons there. On the if you're an employee, then you typically don't get to write off as much of your stuff if you have actual expenses related to the job, because it's expected that they would be provided by the employer. But you'll have the withholdings for federal income tax, and they'll only withhold basically the employee portion of Social Security and Medicare. So if you have an option between those two, just keep those in mind. But if you're a contractor, for sure, realize that that's going to increase the amount of taxes you'll owe at the end of the year. You may want to go to your other job then and adjust the withholdings at that job, possibly increasing withholding a little more if you have a significant amount of contractor work that you're not having withholdings on, or you may have to, if you have significant amount, actually make payments to the IRS. You want to do that during the year, because if you do that at the end of the year, then you'll be paying interest and penalties on it. So just a couple things to consider on the contractor. Independent contractors aren't subject to withholding, making them responsible for paying their own income taxes plus Social Security and Medicare, which is the self-employment tax for a contractor, Schedule C.